No, I don't think it's a ticking time bomb. By the way, I think people have to separate credit. People have been concerned about the size of the investment grade credit market. Those companies, there was a lot of M&A done to create synergies, big companies that de-lever. That I'm not worried about at all. Are there parts of the leveraged loan market, are there parts of middle market lending that you get a bit concerned about? For sure. I think one of the keys for investors today and how you think about things, we're in a reasonable growth environment, but not a great one. You got to be thoughtful about credit. Don't stretch. Some of the triple C rated names have improved recently. I think credit is in good shape, but you got to be really careful about stretching.
Rick, do you think credit's going to be in good shape regardless of what happens with the trade talks? Is the U.S. economy fundamentally strong regardless?
So it's a question of how strong is strong. Listen, you've seen all these ISM reports that show an economy that's actually operating at a pretty good level. You saw a GDP report that showed it operating at a very good level. Listen, I think people should consider that we're not going to grow as fast as we did when you had this big tailwind of fiscal stimulus. But if you think potential growth in the U.S., which we do, is around 2%, you've got an economy that's growing around potential and actually a bit higher than that. Are we slowing from those elevated levels? Yes, we're slowing, but you've got an unemployment rate that keeps coming down. You've got personal income levels that are still good. You've got spending levels that are still good. And you've got a service-oriented economy that's still operating at a very, very solid level. So it's nothing, I was looking at some of the earnings reports. S&P 500 revenues, 58% of the companies reported up revenues. That's a pretty good number. So it's a good economy. Is it really robust? No, but it's pretty good.
So what are the action in today's stock market? Steep drop in overnight futures Sunday night, drop at the open, recovery really almost to the flat line today. What would that tell you about where this market stands on the risk of a trade war and the rising threat that President Trump made in a pair of tweets this weekend?
Yeah, sir, it's a great question. I always find it's interesting. We talked about this morning. We added some paper. We started to buy some equities in this morning. And then when it rallies, people say it was an easy trade. It's never an easy trade. There was some real volatility this morning. But there's one thing that you have to hang your hat on. There's not enough financial assets in the world. We see it in fixed income that rates aren't going. The Bank of Japan's not moving rates forever. The ECB is not going to move rates for a long time. And the Fed was very clear about they're going to be on hold for a long time. We're going to be in a moderate interest rate environment, and an environment which, quite frankly, I've never seen before. The demand for income is so profound, and the demand because you think about insurance companies, pension funds, and an aging population, what happens is that draws people into financial assets. So the demand is tremendous. You just have to buy when the volatility is high and just be careful about the types of risks you're taking.